Feroze, Azeez, we missed you yesterday, joint CEO Anand Rathi, but it's great to have you with us today. And just help us understand, the budget sentiment that seemed absent, and of course, all the sort of negativity around raising the STT on the FNO derivative space sort of spooked investors, some were saying yesterday. But this morning, things are looking a little better as markets are digesting the larger fine print of budget 2026, isn't it?
Yes, Karthik, I missed being on your show as well. It's an honor to be with you, at least the subsequent day to a budget. Yes, you're absolutely right. The market was far more upset than it deserved to be, in my opinion, because, of course, the trading volumes can come down on the future side. Price discovery becomes a little more difficult. That's my belief, point one. Point two, STT is a very unfair tax. So it's not actually about STT. It is about not being pro-capital markets. See, already we are the most inefficient derivative market. I'll tell you why, and I'll back this up with data. Okay, you go to the Nifty 50 stocks. There's one stock which will quote at a 10% premium per annum in terms of roll cost. There's another stock at a discount.
Okay.
This or 2% premium. This should ideally not exist in the top 50 stocks because an arbitrage fund with 1.5 2 lakh crore AUM should get out of that stock which is giving a lower arbitrage and move to a larger arbitrage.
Absolutely right.
It doesn't happen because the transaction cost eats away most of this differential.
True.
When I asked a fund manager, why would you be in a stock which is giving you only 2% till expiry?
It's because of the STT.
STT.
And now that has been hiked.
That has been hiked. So
right.
The disparity of roll cost in Nifty 50 companies. Now, mind you, those are the top 50 companies of the country. How would, as an FII, if I'm sitting in the US, if I would say that if the collateral damage to save a retail investor and demotivate him, if you're going to do collateral damage to inefficiency and bring in inefficiency in the market, which is not very pragmatic. Second, why should an arbitrage fund as a community of investors pay 800,000 crores more to deter a trader?
Absolutely.
Right? He's not taking the risk. So this is not seeming logical.
You're right, Feroze. And if I can just add a little bit of perspective there for our viewers, that perhaps, the retail trader dabbling in FNO may not be on those small volumes that impacted by a second decimal point change. But the arbitrage funds that you're talking about are the ones which, for them, every single tick in the second and the third decimal place makes a difference.
Absolutely. So people, if the ministry forgot the fact that there are four kinds of people: individual speculators, institutional high-frequency traders who are also sometimes speculators. Third is arbitragers. Fourth are hedgers. Right. Now, if somebody is issuing a structure product in India on Nifty, he has to hedge his liability. He's got nothing to do with speculation. He has a liability. He's hedging that liability for the next 3 years. So he keeps rolling over 36 months. Now, he pays a larger cost. To deter one community, you can't penalize the other two, who are actually 60% of the market. So that's one. But I personally think this is a buying opportunity because the trader fraternity, the FII fraternity, has already sold on the pretext of all the global uncertainty. So there's not too much left in their hands to express their displeasure. Is why today you see some degree of stability. If they were still having lots and lots of money, the active FIIs, not the passive ones, they would have dumped more today. So they're upset, but they don't have too much stock
to show how upset they are. Right, and I think that is the kind of buying action that we are seeing today because cheaper valuations, obviously, after yesterday, the markets had tanked. But I want to understand from you, did Budget 2026, Feroze, have anything in it to attract FIIs or even FDI, for that matter, back into India? Because one was expecting that there are going to be at least some policy announcements on ease of doing business, on assurance of capital return, which would have at least motivated some money to come back into India, especially at a time when we are seeing the kind of depreciation in the Indian rupee.
Yes, Karthik, I think one nuance which is not being spoken enough, which can bring in some stability in the small cap stocks in the year and a half or two to come, unless they change it back again. If they do, the buyback tax, everybody is excited about the reduction in tax to a retail investor. That's actually very little a quantum. So a retail investor was anyways not in the 30% slab, right? There are 3.5 lakh people in a country this large with a greater than 1 crore Form 16. So coming back, I am very excited about the buyback tax being differentiated for the promoter, corporate promoter, and the individual investor, not because of the tax saving, but the frequency of buybacks will suddenly shoot up. They had come down. See, what used to happen? Now, let's assume you're a listed company. Karthik Rai is the chairman of a board of a listed company. He sees 2,000 crores in his reserves.
Yeah.
He sees FIIs have dumped his stock. He wants to extinguish. He wants to buy back the stock, reward the shareholder by a buyback, and extinguish the stock. And it in turn, as a collateral benefit, shores up the stock or gives stability or gives exit to somebody by participating in the open market. Now here you see the NSE small cap 250 stocks, total balance sheets in terms of reserves is one of at the peaks.
Yeah.
Now they're not able to do buybacks. So the frequency of buyback going up is what excites me rather than the tax differential for the buyback.
Feroze, while we're talking about gold, let me also get your perspective on both gold and silver. The kind of volatility that we've seen, first the astronomical rise and then a historic crash like we haven't seen after 1980. Overall, for let's say, retail investors at this moment who were first living in FOMO that they've missed the rally and now they're thanking God that they did not participate at those levels, what should they do now? Which direction are commodities likely to take from here? And what should their asset allocation with respect to commodities look like?
Karthik, I've been saying this, one thing which I'm repeating on your channel, that silver is not silver at all. Okay, there is a very profound thing I'm trying to say here. Okay, it's difficult to understand. Silver is not silver. Silver has become a trading underlying in Chicago Mercantile Exchange to gamma traders. Gamma traders are those who are not worried about the direction of the underlying. Like one of the institutions which SEBI alleged that they used in Bank Nifty, that's the exact same trade which can have been identified by the gamma buildup. What is gamma buildup? In an options market, the options which are there out of the money are a very high gamma instrument. So, of course, in the world of AI, I can use a word and let it be and not worry about explaining, because the viewer can actually go to one of these AI platforms and ask to explain it.
Sure.
So what I'm trying to say is that silver is not silver. That's why an asset behaves very differently in a specific period of time.
Okay.
Right? Gold has never behaved like this in the billions of years.
Right.
Why did it behave at a volatility of 72 standard deviation for the last 7 months? It was not because it was gold, it was a gamma trader. Why did Oracle in the US on a specific day, 11 September last year, go up 42%? Why did India's Infosys ADR go up 37% on one result? Those are all gamma squeezes one has to understand. So if you want to be in gold, you have to stagger. You can invest in gold, but if you stagger it in 12-14 months, you will actually buy gold and not the gamma of gold.
All right. Okay. I have two final questions since we are really decoding, the impact of Budget 2026, especially on the common man. I'll ask one question each to the two of you. Feroze, first up, that reduction in sort of, the custom duty when it comes to personal items from 20% to 10%. In spirit, does it go against the concept of Atmanirbhar Bharat? Because the government does seem to be sort of assuaging the concerns of the depreciating rupee. So now foreign imports for personal use coming at 10% import duty, rather 20%. But does it go against the spirit of Viksit Bharat Atmanirbhar?
I don't think so. These small tinkerings are generosities, which are logical.
Okay.
Right? If you look at what the government does to shore up exports, you look at those iPhone lines of assembly. We today export $23 billion of iPhones, up from 17 just a year back. 2017, we were importing iPhones.
Right.
So there is a lot of balancing factor. So you distribute benefit, concentrated gain is a concentrated balancing factor is always good. So you distribute the gain of what you've done from 2017 in electronics. By exporting iPhones.
All right. Well, let's leave it at that. Feroze, Azeez, thank you so much. As always, a pleasure speaking to the two of you and for really simplifying all the fine print of Budget 2026, especially when it comes to personal finances and the markets. Thank you so much for your time with that.